Hello guys, hello my people. Welcome back to today's lessons. Uh, Remember, this is specifically for grade 12 students. This information can be little or of no use to the post-matric students, but it can be very useful for grade 12 or grade 11 students, even grade 10. Welcome to our today's lessons. My name is Sello, and I will be taking you through to analysis and interpretation. That's the ratios that everyone says they are difficult. I'm going to change that just now. Remember, I'm doing this for my students which are in a paid group, and I just decided to share a few of these videos on YouTube and give others the opportunity to see and evaluate me and tell if these videos are useful or not. You can comment under. You can call me on my number 079 621 5782. Okay, we are going to be discussing ratios which are classified into 4. The sooner you know how to classify these ratios, the better and the easier it will be for you to understand these ratios. Note that ratios and analysis are classified into. Please notice that mistake there. It was supposed to be 4 types and not 3, because as you can see, they are 4. We have liquidity ratios, you have financial performance indicators, you have gearing ratios, and lastly you have return on investment indicators or ratios. And today, or firstly, we are going to be starting with the liquidity ratios. Okay, I'm just quickly going to explain to you what each classification means. The liquidity ratios are simply explaining or telling the financial statement user that the company will be able to pay off its short-term liabilities or not. It's even written there, as you can see, number 1, it says liquidity ratios measures the company's ability to pay off the short-term debts or liabilities. Guys, I made these notes myself and did not copy them from anywhere else, because the books do not really explain these things in depth. So that's why I decided to make my own notes and come to explain to you. Here I'm going to show you, when they say comment on the liquidity of the company, which ratios to use. Because a question mostly will say to you, comment on the liquidity of the company and state at least 2 financial indicators. So students get confused because when you're in matric, they give you an answer sheet to write on, and they give you big spaces and too many marks. So when a student see a question saying comment on the liquidity of the company and state at least 2 financial indicators, 9 marks, they get scared. They don't know what to write. They end up writing many irrelevant things. Whereas you can simply write 5 or 4 points and get all the marks. You can write only 3 lines and get all the 9 marks if you are writing the right things. So, but then when they are seeing big spaces and too many marks, they end up writing many useless things. So I'm just simply going to tell you. So under liquidity ratios, This is where you have current ratio, you have the acid test ratio, you have debtors collection period, you have creditors payment period. There are many, but I'm only going to be talking about these 4 because they can never state 5 financial indicators. No, they will state 2 financial indicators. Okay, right, let's get right on it. So now we'll start with liquidity ratios. As I said, liquidity ratios measures company's ability to pay off its short-term debts or liabilities, and number 1 of that is a current ratio. Firstly, ask yourself this: how is current ratio calculated? There is a formula. I showed you a formula, and it says to you current assets divided by current liabilities. Guys, current assets are the short-term resources of the company. Now think of balance sheet. What do you have under current assets? You have inventory, you have debtors or trade and other receivables, it's the same thing, and you have cash and cash equivalents. These are the company's resources on a short-term basis. Now let's go to the current liabilities. Under current liabilities, what do you have there? You have trade and other payables. These are the liabilities now. You have trade and other payables. You have current portion of loan. You have bank overdraft. You have SARS income tax liability. So, if you can think about this, the assets, the current assets, you want the current assets to be more than your current liabilities. In that case, it means your current assets can be able to pay your current liabilities. All right. Back in the days, they used to use standard norms. They were saying current ratio standard norm is 2:1, meaning current assets must be 2 times greater than current liabilities, because we want to know if your current assets can be able to pay your current liabilities. That's what we mean by these current ratios. I mean the liquidity ratios measures the company's ability to pay short-term liabilities. We want current assets to be more than current liabilities, but not too much. So I will get in more details to that. So firstly, when they say comment and state 2 financial indicators, you will name current ratio and acid test ratio. So now I'm simply going to take you through the comments, how to comment on current ratio. Look at that point number 3 where it says comments. I say to you, write only 3 comments. You don't need to write more. As I said, you only need 3 lines, 3 relevant lines to comment on a current ratio. All right. So first comment, explain or the first comment explains the change from last year. So you will be calculating, or you would have calculated current ratio for the current financial year. If you were doing financial statements for 2019, they will give you current ratio for 2018, and then you will calculate current ratio for 2019. And your first comment will be like this: e.g., can you see e.g. there? Current ratio has decreased from 2.1:1. I mean 1.2:1 in 2018 to 0.9:1 in 2019. Full stop. That's where you end. You will get your marks for that. You may get 2 marks. It depends on how many marks were allocated to that particular question. So first comment, you'll say current ratio has decreased or increased depending on what happened. You would have calculated for the current year and you compare that to that of last year. current ratio has decreased from 1.2:1 in 2018 to 0.9:1 in 2019. Second comment now. Explain what caused the change. Guys, when you're doing these things, current ratio and acid test ratio, it's important to look into your balance sheet or your trial balance. You are looking for the current assets and your current liabilities. You want to know what caused the change. Why did the current ratio decrease from 1.2 to 0.9 from last year to this year? That's why I'm saying to you, second comment, explain what caused the change. And B, note below. For this, look at current assets and your current liabilities in your balance sheet. And I'm giving you an example on how to explain this change. Okay, these are the possible reasons that could have or might have caused the change. Number one, e.g., the decrease in current ratio was caused by significant or big decrease of debtors control from 450 in 2018 to 200,000 in 2019. Remember, current ratio is calculated by taking current assets to current liabilities. So that means if debtors control forms part of current assets. So if debtors control decreases, obviously your current assets are going to decrease. All right? So now here you're explaining what caused the change or the decrease in debtors in current ratio. You are saying the decrease in current ratio was caused by the significant or the big decrease of debtors control. You even show the figures from 450,000 in 2018 to 200,000 in 2019. Or you can say the decrease the decrease in current ratio was caused by the decrease in inventory. Remember, inventory forms part of the current assets. It was caused by the decrease in inventory from 1,800,000 in 2018 to 950,000 in 2019. Or again, remember, under current assets you have three things. You have debtors, you have inventory, and you have cash and cash equivalent. Or lastly, you can say the decrease in current ratio was caused by the significant decrease in cash and cash equivalents from this amount in 2018 to that amount in 2019. Do you see that now you are making sense? You'll get the full marks for this because you're explaining exactly what happened in the financial statements of this company. You are explaining what caused the decrease in current ratio. You know what you're talking about. You are analyzing the financial statements. That's why these things are called analysis and interpretations. Because they say that as an accounting student or as an accountant, you must be able to explain the financial statements to someone who does not know anything about accounting. This person is looking at financial statements. They don't know what's happening here. They don't see anything. They just see debtors control, what. So now you are analyzing that for them. You are telling them that the current ratio has decreased because of these things. Do you see that? Now, guys, let's jump to the third and last comment. Now, with this comment, you explain what does the change mean. Do you see that? First comment, you told the financial statement user that the current ratio has decreased. Okay. Second comment, now you explaining to them what caused this change, this decrease. You're explaining why did the current ratio decrease from 1.2 to 0.9. So now the third comment, now you explain what is the meaning of this decrease in the current ratio. So I have given 3 instances because you only need 1 comment each. Remember, first comment you explain the change, second comment you only take 1 point of these 3 that I have written there. You don't need to write all those things unless they say it's 24 marks. But if it's just 6 marks, like it's always the case, you are only going to take 1 point each. So now let's go to the third and last comment. They say explain what is the meaning of this decrease or the change. So I've given 3 examples. In a case where there was an increase in debtors, in a case where there was an decrease in inventory, and in a case where there was a decrease in cash. What is the meaning of that? All right, let's go to case number 1. It says, e.g., decrease in debtors. This means that the company may have enough cash to pay off its short-term liabilities because the decrease in debtors means that debtors have paid their debts. Guys, remember, when debtors control goes down, debtors control is simply the monies that we are owed by our debtors. We sold stock on credit to these people. Now, when this thing of debtors control goes down, it means those people have paid us. Do you guys see that? So the decrease in current ratio does not always mean that the company is not liquid. No. But the decrease can mean that many of our people who owed us money have paid us. And if they have paid us, then we can be able to pay who? Our creditors. Because remember that these ratios, they measure the ability of our company to pay our creditors or our liabilities. Okay. So now, e.g. number 2, decrease in inventory. What is inventory? Inventory, my people, is simply the stock that we sell. The stock that we sell on a day-to-day basis. And ask yourself this, what happens if the stock goes down? If the stock decreases from last year to this year, what does it mean? It means we sold this stock. And by selling this stock, we will be able, or we will have money to pay our creditors or our liabilities. Does it make sense? Because if you are holding too much stock, just imagine if the stock had increased from 2018 to 2019. It means you are still holding this stock. And remember, you bought this stock, or part of the stock, you bought it on credit, meaning you have to pay for it. They have given you time. When you buy stock on credit, they give you something like 60 days or 90 days to pay for the stock. These are your creditors, these are your suppliers. They have given you 90 days to pay for the stock. So if you can't sell the stock, then you can't pay these people, or you'll have to use your own money, which is not good. So, but now, when the stock decreases from the previous year to the current year, it means you have sold the stock, and as a result, you will have money to pay for the stock. Does that make sense? So now, number 2 says that decrease in inventory. This means that the company may have enough cash to pay its creditors, as the decrease in stock means more stock was sold in the current year. I hope this makes sense, guys, because it is very self-explanatory. It explains itself. When the stock decreases, it simply means you have sold more. And by selling more, you have money to pay. So you see that now you're explaining. Please, guys, let me take this call. Okay, guys, sorry about that. That was my boss. I had to take the call. We shall continue. All right. So now I told you that the decrease in inventory simply means that you sold more stock and you should be able to pay off your suppliers. The last one is example number 3, decrease in cash. Now this is easier, guys. What does it mean if your current ratio decreased because there was decrease in cash? Cash and cash equivalents is simply the cash that you hold in the bank, all right, of the company. So what happens if your cash goes down? It means that you may not have enough cash available to pay who? Your short-term liabilities timelessly or on time. Timelessly simply means on time. Okay, So now you have explained the meaning of the decrease in current ratio. This is how you must comment, guys. So you can take one comment from each of those that I have written, but remember, I have only given you examples in a case of decreases. These things can increase, all right? So please don't cram, rather try to understand these things. Okay, I know these things used to confuse me too, but then until I realized that these things, they are very easy. You simply explain what happened here. Okay, still on liquidity ratios, we are moving from current ratio to acid test ratio. Acid test ratio, the formula is more or less the same to that of current ratio, only that this one you less or you minus inventory. Remember that one says current assets is to current liabilities or divide by current liabilities. This one says current assets in minus inventory divide by current liabilities. Cool. Well, this acid test ratio is simply measuring the ability of the company to pay off current liabilities without having to rely on inventory or without selling the stock. All right. Please, I forgot about that. Okay. With this one, they're simply trying to know or trying to see if the company can currently pay off its short-term liabilities without selling stock. That's why they minus the stock. That's why they minus inventory. They want to know, or with this cash that we have currently and the money from debtors that we are being owed, can we pay off our liabilities? Okay. And the comments are more or less the same to that one of current ratio. That's why I said first comment, same as above, same as that one, same as this one right here. You explain the change. You will say its acid test ratio has decreased from this to that. Okay. And then second comment, same as above. So it will be same as this one. Comment, explain what caused the change. So you will explain, but remember here you can't talk about inventory. Remember, guys, you can't talk about inventory here because you minus inventory. So you will find reasons why acid test ratio has decreased. That means you'll only look at what you'll only look at debtors control or trade debtors or trade and other receivables and cash equivalents only, or you can look at current liabilities. Okay, so now I'm more interested in this the third comment. Third comment, different from the current ratio one. All right, so this one you will see, remember third comment, what do you have to do? You have to explain the meaning. What does it mean? The third and last comment explain what does the change mean. So here you will say third comment, different from the one. So you example, this means that the company cannot be able, or the company will be able to pay off its short-term debts and liabilities without relying on its inventory or stock. Okay, because you explain the meaning now with the last comment. You explain what is the meaning in all this change in acid test ratios. So here you will say this means that the company cannot be able, or the company will be able to pay off its short-term debts without relying on its inventory. All right, as easy as that. So now the third one, debtors collection period. Debtors collection period. What is the meaning of this? Measures the number of days the company takes to collect money from its debtors. So here the company sold stock on credit, remember? So people are owing this company. So this ratio or this number will tell you how long is the company taking to get their money back from their customers who bought stock on credit. Okay, and this one will come in numbers. It's not a ratio, this one. It gives you numbers, number of days. So the less the numbers, the better. So when you sell on credit, you want to collect your money as soon as possible. Okay, you want to collect your money as soon as possible. And the comments are like this. The first comment: explain the change from last year. Exactly the same as those. You always explain the change, what caused the change, and what is the meaning of the change. All right. Okay, so now let's go through the first comment. What is it saying? Explain the change from last year. So you will say, example, debtors collection period has increased from 33 days in 2010 to 57 days in 2011. You explain the change. What happened from this year to last year, or from last year to this year. Now the second and third comment: explain the cause of the cause and the meaning. So this here I just made this thing short. You remember, I'll say the second comment explain the cause, and the last comment explain the meaning. So here I made it the same, like one comment, because you can't comment many times on this one. Second and third comment explain the cause and the meaning. So you'll start with the second comment. You'll say this could be due to the company's poor collection policy in 2011 as compared to in 2010. Guys, collection policy is where the company will say that let's say in 20 this thing has decreased. Can you see that? Because in 2010 they were taking 33 days to get their money back from their customers, but look, in 2011 they are taking 57 days, which is not good. It's not good. What could be the reason for this? You might find that in 2010 they were saying those who pay first will get 20% discount on their payments or of their debts. Do you see that? And then in 2011 they didn't do the same thing. So that could lead to people paying late their debts. Do you see that? Or maybe that's the collection policy. When you are saying we are going to offer discount to those who pay in the first 30 days, it's a collection policy. It's a policy that makes sure that people will pay earlier rather than later, because they will be running for that discount. So you see, maybe in 2010 they said that those who pay first will get discounts, and people came running to pay for their debts, and as a result it took only 33 days to collect all their money from these customers. Do you see that? And in 2011 they didn't offer people the same offers. That's why people took 57 days to pay their debts. Or maybe in 2010 they were calling people on a regular basis, telling them, hey guys, come and pay. And in 2011 they didn't do the same thing. It's a collection policy. Or maybe in 2010 they were saying those who pay after 40 days, we will charge them an interest of 50%. When they charge you interest, your debt will increase. So you will pay before that time to avoid this interest. Do you see that? So this could be the reason why debtors collection period has increased from 33 days to 57 days. So I explained to you the cause now. This could be due to the company's poor collection policy in 2011 as compared to 2010. Now, the third comment, explain the meaning of this. This will result in the company not being able to pay its creditors or suppliers on time, and therefore incurring interests. So now, imagine that maybe you bought this stock on credit, and they said when you buy this stock on credit from your suppliers, they said you must pay us back in 45 days, but you only took 57 days to get your money from the debtors. Do you see that you'll not be having money after 45 days to pay your creditors, because your debtors have not paid you, because your debtors are paying you after 57 days and you must pay your suppliers after 45 days. So you can agree with me that now that after 45 days, you still don't have money to pay your suppliers because your debtors have not paid you yet. Does that make sense, guys? I hope it does. So now, first comment, explain what happened. It increased or decreased. Second comment, explain why it increased or decreased. Now the last comment, explain the meaning of that decrease or increase. Okay, now the last one, guys, is creditors payment period. The last one, remember, this is the liquidity ratios. We started with current ratio here. Current ratio, I told you how to comment on it. We came to what? Acid test ratio, which measures if the company will be able to pay their suppliers without having to sell their stock. And then number 3, now we were at debtors collection period, which measures how long does it take you to collect your money from your debtors. And the last one now is the creditors payment period, measures the number of days the company takes to pay its creditors. Now, how long does it take you to pay your creditors or your suppliers? First comment, explain the change from last year. These things are easy, guys, as you can see now. The first comment, explain the change from last year. Second and third comment, explain what? The cause and the meaning. Same as that one. The payment period has increased because the company asked for an extension from its suppliers. Remember, creditors payment period is the number of days that you take to pay your suppliers. So you can actually ask your suppliers to increase. These people are making noise now. You can simply ask your suppliers to increase the number of days that you take to pay your suppliers, or the last one now, increase if it increased, maybe creditors payment period increased from 60 days to 90 days. What does it mean? The last comment, the increase means that the company can be able to pay off its. So the creditors payment period, when it increases, it's good because it means you have more time now to pay your suppliers. But the debtors collection period, when it goes up, it's not good, it's bad, because it means you are taking too many days or too much time to get your money back. Please get that. Debtors collection period, you want it to decrease rather than increase. Creditors payment period, you want it to increase rather than decrease, because when it increases, it means you have more days to pay your suppliers. Because, guys, you know that the liquidity ratios, we want to know if you will be able to pay off your short-term debts in time. Okay, so that's it, guys, for today's class. We were only discussing the first of the 4, the liquidity ratios. Please watch this video over and over again, make your own notes, and make sure that you understand these things. Now go and get questions, treat questions. And when you treat questions, guys, have 4 question papers for the previous exam years. Like, for example, have question paper for 2015 November, 2016 November, 2017 November, and 2018 November. Treat the same things from each of these 4 question papers. Do these ratios from 2015 question paper, mark yourself under exam conditions, and then do these ratios in the 2016 question paper and mark yourself. Do the same things in the 2017 question paper and mark yourself. Do the same thing in the 2018 question paper and mark yourself. After these 4 question papers, you will be having a clear idea of what is it that you have to do or what is it that you have been doing wrong. All right, there's an application on Google Play or Google Store or Play Store. It's called Past Papers. Grade 12 learners, please make use of that application. Go and download that application. It will give you all the question papers for metric, for the past years and their memorandums so that you can be able to treat them. That's it for me, guys, today. I hope to see you again in our next class. We will be discussing the second financial analysis, which is financial performance. Financial performance, here are they. Number 2, financial performance. This is the gross profit on sale, operating profit on sale, net profit on sale, blah 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 blah. So that's our next class. But that's it for today. Remember, my name is Sello. You can call me 079 621 5782, or you can WhatsApp me at any time. Thank you very much, guys. Oh, another thing, please don't forget to subscribe so that you are aware of my videos, because I'll be uploading more videos this winter. So please just press the subscribe button and then get updates on my videos. Thank you.